40 years ago, two young chartered accountants decided to make their mark in stock markets, unheard of at that time. The two gentlemen, Raamdeo Agrawal and Motilal Oswal, over the next 40 years created one of India's leading financial conglomerates. This is their story on Forbes India Pathbreakers. Stay tuned. I'm Neha Bothra. Mr. Agrawal, Mr. Oswal, thank you so much for joining us on Pathbreakers.
Thank you.
Mr. Oswal, tell me a bit about your partnership with Mr. Agrawal. We were talking about how you were in the same hostel and it's developed into a partnership of 40 years. What does it take to be in a partnership for 40 years?
We both are chartered accountants. We stayed in the same hostel, and after study we stayed in the same place in Lokhandwala. So that was the connection really, I think, where we could relate to each other. My brothers were doing stock market business. He was doing research. So that really, I think, also really, I think, further kind of deepened the connection. In any case, my whole family is entrepreneurs into business. He also wanted to do something on his own. So I think that's where we proposed to each other and we started in 87. So it has been fantastic journey from there. And your question about what does it make to sustain that partnership is very, very kind of, I think, important. I think meeting our minds, sharing our passion, sharing our values, and very important, building on complementary skills. Like he was fantastic in research. I was good in building relationship and trading part. So you started with that, and then we also were lucky to be on the right place at the right time. Thanks to Harshad Mehta boom, and then markets opening up, a lot of liberalization happening post Manmohan Singh came in.
So Mr. Oswal spoke about complementary skill sets. How did you decide and demarcate your areas of responsibility? And you've actually stuck to it for close to 4 decades now. So when there are overlaps, how do you go about it?
Yeah, it's a very natural. I mean, since we started from beginning, if company meeting is there or research meeting is there, strategy meeting is there, I'll be in the front, but handling the market side completely, in the sense that transactions, settlements, all sorts of things, and even the accounting and all ops part, that all got reported to him somehow. It's all interlinked. So it was very natural, and whatever needs to be done, say if some part of accounting he's not understanding or say help is needed, I would also do it. We had certain common principles, like not allowing any checks to bounce ever, whatever it takes. We'll not issue something which we cannot honor. The division of work was happening naturally. Whosoever had any time, whatever is there, grab it and do it. So that by the evening everything is done.
When you're smaller, it doesn't make any much difference because everybody is doing everything. Like if he's not there, I'm also advising the clients, but normally it goes with natural strengths. At the same time, there's a joint responsibility. When you're a partner, you of course really, I think, share the responsibilities. Once you have trust in each other, then automatically it flows naturally. But the organization become larger, then you divide the responsibility based on your strengths.
How do you do it when the organization becomes as large as it has?
See, to be very frank, I never knew that really organization become very large or will become so big in terms of business or markets. And markets also have been exploding to our advantage. Of course, that is for everybody, but we could exploit to our advantage. So when we started, I was very good in execution. He was good on strategy. I never used to read books. He used to read a lot of books and he used to give me read this book or that book. So I think I learned my reading from him. But I think once the market opportunity is there, you keep doing right things. I think the people, apart from the strategies, of course, I think you need to really have the right strategy. But getting the right kind of people who are aligned with your passion, who work very hard, who are aligned with your values, it is very, very important. So we started with 2 people, maybe half-time peon or a part-time clerk. So from there, we are now about 11,000 people. So, and we never knew how to go to a recruitment agency. But I think through your network, you add more customers, you know some people, and then you read a lot of things that what are the trends in terms of from where to get people in the stock market. Second thing is the leverage upon the technologies. So people and technology, these are the 2 big levers which really I would say have been the cornerstone of our growth.
What do you think are some things you did differently from competition that gave you an edge on the strategy front, something which gave you that head start and helped you maintain the lead in the industry?
Yeah. So in 87, when we started, to be a chartered accountant in the stock market was a new thing. हम हट के कर रहे थे उस समय. Like we must be among the top, first 4-5 chartered accountants in the stock market. It was not a very, what you call, common career. But I had passion for the stock market. I couldn't have done anything, whether market would have gone up or not, but I would have ended up in the stock market only. He was actually practicing chartered accountancy, like he was helping people file their tax returns and things like that.
Audit and all.
Audit and all. So he was good at it. I was not good at that. So I would have definitely ended up in the stock market. Since his brothers were also in stock market and they needed help here, we all came together. In 85, 86, when we took up career, we thought that we want to make 4-5 lakhs per year. So that 2 lakhs for him, 2 lakhs for me, family will be very happy. That was the total objective to start with. And here we are. So I think what we did was we backed our passion. And incidentally, passion was not so popular at that point of time. You know, today a lot of kids, they want to come into the stock market.
Yes.
But they are not alone now. Everybody wants to be in the stock market. So now it's a very it's a commoditized career, I would say. But when we started, it was completely new, brand new.
Mm-hmm.
I think Neha, just to add to what Raamdeo said, there are two things which really we did differently looking back. First, in the stock market, there was no service culture. Because it was a, you can say, the seller's market. Okay. There were few brokers catering to all across the country. Okay. So always the customers really, I think, didn't expect any service. Okay. Second thing is that there was no research available to retail investors. So as I said, the Raamdeo used to study all these balance sheets. In fact, I used to ride on his bike on Sundays to collect the balance sheets because the balance sheets were not available. So there was a Raamdeo's friend called Didi Ladda who was an odd lot dealer. So we used to go to his house to collect the balance sheets and then he used to read it. So I think advice and high quality service were very, very differentiated when we began. And that advice or the research is still today is one of the biggest strength and differentiator when we talk to retail customers. And of course, institutional customers or asset management or private wealth, that remains kind of, I think, big kind of strength for us as a firm.
Tell me about some big turning points you had in your initial years that made you feel that, no, we don't need to think about 2 lakh and 4 lakh, we can actually think crores. When did you start thinking big?
Every year was bigger. When we started, I was not married, he was married. So by 87 we started, by 88, I felt confident that I can run a family. You know, like we must have made maybe 2-3 lakhs rupees first year, post-tax. We paid taxes, all the taxes right from day one.
Okay.
So I could see that things are shaping up. And it is a rise of India actually, right under us. Apart from whatever we did, but India was rising, you know, and it was a seller's market. So there were a lot of services needed and we were there just at the right time. And we kept on building, we were open to invite people. I mean, even at that point of time, we started hiring people where they were more competent than us, they were willing to run. So we started building organizations right from beginning. And I think the real turning point was Harsha Mehta Bull Run.
Yes.
In 4 years, we made about, say, 15-20 lakhs. And that too we used for buying the membership. So we had nothing. In 1990, if you ask me, we had nothing. And then Harsha Mehta Bull Run happens. And in 19 months of that bull run, which is unprecedented in any part of the world, it was so big, we made 30 crores. You know, and no speculation. It's all broking or investment returns. And that 30 crore, of course, became 10 crores immediately after the collapse of the market. But that gave us that whatever was needed to build and then we said, nobody can throw us out. Because it was a kind of a club. You know, old brokers, they were ruling the rules. So we said, now they're all friends and now we have enough capital.
Yes.
And then we kept on building. So I think that was a huge turning point. I think in every business it happens. Someday you hit the tailwind. And that's what really happened.
Mm-hmm. Mr. Oswal, when I spoke with Mr. Agrawal last time, he mentioned there were a couple of months when the firm had to incur losses. How did you write that?
2001 and 2, post Ketan Parikh scam, .com bust. Yeah. And then KP also had happened. Ketan Parikh scam also happened.
Mm-hmm.
I think there were only 2 years where we had losses. And of course, the time was very tough. And We are very, very conservative people. So we usually, I think, look at every day how to cut the cost, because in bad time, what you can do is, I think, only look at your cost structure. Okay. So you'll have to, of course, I think, take certain decisions, like you stop paying rent, or you stop at least making sure that you don't have poor performers. So I think take stringent action on the people, cut cost, and I think be hopeful, isn't it? Because optimism is very, very important when the time
Yes,
is tough.
exactly.
And we have seen many crises in the market. But I always feel that I think crisis is an opportunity for us to become better. I tell my people that in bad time you become better, and that only will give you license to become bigger in good time. So keep investing, don't lose hope, and keep doing the right things from customers and people perspective.
Mhm. So it actually helped you emerge stronger, and that's when I think the diversification also started, from being just a broking house to actually venturing into different
there was
verticals too.
even business model was changed a little, and even the cost structure was changed at that point of time. We were running with 100% fixed cost. Then we said the only way is that because markets are fluctuating, our revenues are fluctuating, let's make the business model a little more variable oriented. So we started compensating the employees a little more, but large portion variable, so that if by chance the markets take 50% down, at least employees also share in that thing, and we have less and less problem. So that helped us big time. Again in 2008, after 5-6 years, again market slumped.
Yes.
So at that point of time, our model was very robust.
40 years is a long time. You've not just seen market up and downs, you've seen personal ups and downs as well, and you've been together. How did you respond when the market was abuzz with rumors of a possible rift between the two of you? Was it unsettling at some point?
It keeps coming every 3-4 years.
Every
it
3-4
keeps
years.
coming.
Last year
Still
again somebody
people
was saying.
keep talking about that. I think we don't give too much importance to that. Of course, I think you need to listen to them and be alert, because in markets sometimes rumors also can create havoc. Because when people say there's a lot of losses, then I think a lot of your customers, in fact, they can come and I think take away the assets from us. So reputation is very, very important for us. I think we had that trust in each other. We have now still that bonding is very, very strong. So that doesn't bother us, but it bothers more from the customer's perspective when they call us.
Yes.
What's happening there?
So do you discuss amongst yourself how the stories are originating, where the genesis of all this is?
We don't discuss from where it is. We try to figure out how the hell to quench the fire type, So first time, I think in 2004-05, we had to actually give advertisement in Economic Times. We had to spend 4-5 lakhs
Really?
rupees, yes, to say that everything is fine. So, and sometimes you give interviews, and now media is there. And I think there are so many dear friends who know us better than anybody in the market. Those jokers, typically they'll call up one of the close friends, and then they hammer their head, So they'll be our spokesman, our employees will be a spokesman. That's how, and after 15-20 days it dies down. But it keeps coming for 5 years with different themes, with different reasons. Sometimes loss, sometimes something, God knows. I mean, somebody's bought over. So, I don't know.
It's a case of smoke without fire.
Yeah, of course. I mean, only smoke. And then actually we have to figure out, why this keeps coming and just respond to that,
Especially now in social media world, anybody just put in something, I think, small WhatsApp message or in the kind of Facebook or something. So people love to, I think, make these kind of talks everywhere. So it doesn't bother us. Yeah. But I think when you're big, the issue is that managing the various stakeholders. Okay. Your employees, your customers, regulators. In one of the time when exchange said, "Hey, what's happening in your company?" So I said, "Boss, nothing. There's nothing. You don't worry about that." So I think people kind of gossip around these issues.
Moving on, you've built a financial giant. How do you stay agile and respond to the market, which is changing so fast?
So market has been changing right from 87. I mean, when I remember it was a bucket shop, completely physical, all sorts of T+21, 500 brokers, 200 crores trade. They were struggling to settle. Today, it is 1 lakh time bigger. Market is settling more than 200 lakh crore trades every day, because trading, settlement, everything is digital. demat, automatic full,
And options.
and options. So I think market has exploded, and everything has changed. So we have been adopting. So from there, we have come to a level where it is T+1 settlement, and now they're talking about T+2 hours, 3 hours. Actually, the guys who couldn't adopt, they've already fallen by the wayside. So we are one of the few survivors, actually, I would say. So I think as the digital economy unfolds, India rises from 4 trillion to 8 and 16 and all, I think the opportunity will become gigantic, and challenge to adapt will be even more so. And I mean, I keep telling, I mean, this thing will consolidate. We have to be on the right side of consolidation. So far we have kind of survived and prospered, actually. So I hope we have that mindset of adaptability. Anything new coming, it doesn't threaten us. We are willing to take it on. That's the mindset.
How do you stay ahead of the competition? Since you focus on the execution part of it, how do you stay 2 steps ahead when innovation is the name of the game, really?
See, we really, I think, have created a very strong knowledge base through research and advisory capabilities. Second thing is that your employee brand, that what is your employee value proposition. So attracting and retaining the talent is very, very important, and that gives an edge. And the brand, power of brand through trust, I think the transparencies, those are few levers definitely we try to leverage upon to compete in this marketplace.
Mr. Agrawal, you mentioned that the underlying belt is moving so fast. Of course, the country is growing. India is a global economic powerhouse in the making. How do all of these pieces fit in when you think about the future?
Yeah, so one of the things is that markets have exploded, but while markets have gone up by say 100,000 times, the number of players have come down from 500 to say maybe 50.
Yes.
So that's also reality. Maybe from 50, it might come down to 10 or 15 as we go forward, and market will again explode by 100x. So you have to be relevant. It's not about number 1 or number 2. You have to just survive. You have to be in the mainstream. You have to be accepted by customer. Your services has to be good enough. Your financial performance has to be right. You see, this is a place where greedy people come, and there is a lot of risk. So we have to be very good risk manager, very good, and you have to remain differentiated. Right from 87, we said we want to help people make money in the stock market worldwide. I don't know from where it came, but we wrote this, and this is what we believe in. I don't know how many guys believe in making sure that clients make money. The reciprocation is that when clients make money, they will definitely help us make money. That is not said in mission statement, but that is understood by me. So that's why we go all the way to help the client make money in the stock market. So that remains our differentiator, and we keep working towards it. Whatever is required, whether it is research, whether it is advice, whether it is execution, whether it is hand-holding, we keep doing it. And the good thing is we're talking about 120 million, 130 million clients. And my sense is that next 10 years we are headed towards 400 to 500 million clients. How many can we cater to? At best, Motilal Oswal can take care of 5 million, 10 million clients. So I think the opportunity size is very large. We have enough resources now. We have understanding of the market. We have the brand equity. We have employee equity, and we love doing it. See, another thing is that we are actually very passionate about what we are doing. We love what we do.
Mr. Oswal, you've achieved milestones far beyond what you set out to achieve initially. What next for an organization both of you built from scratch?
The growth, of course, I think is very, very important part. The biggest business today is broking business, where our market share is about 7%. So, and some of your competitors even has got higher market share than that. Although we look at the profitable market share, revenue market share, which is also high, but still, I think there's a tremendous headroom for growth in every piece. Say private wealth or asset management or brokerage, retail brokerage, institutional brokerage, now affordable home. So we feel that there's tremendous headroom for growth even at existing level, and markets also are expanding. So in the growing market, how do you grow market share? That's what the biggest opportunity for us, and that's what our efforts are. So keep becoming bigger and better.
So are you looking to tap into white spaces in the financial services industry to achieve this goal of becoming bigger and better?
Yeah, so actually in last 15, 17 years, Till about 2007, mainly it was a retail broking company. But now we have diversified into 5-6 more, capital market businesses like wealth management, iBanking, your private equity, so asset management companies. So those things have come in. So we have now 6-7 businesses, and as Moti said, in none of them we are number 1, 2, 3. So the first thing is the opportunity is exploding at the rate of, I would say, 15 to 20%, and then there is a consolidation. So opportunity size is clearly growing at the rate of 25%. So we have a lot in the hand. We are not against doing something which will fit into our capital market business, but right now the whole effort is to go vertically up rather than horizontal. So we would like to become, say, instead of 7% market share, 10% market share. Instead of managing, say, $10 billion, manage $20 billion, $30 billion. Because, say, mutual fund industry, where we are managing, say, about 55,000 crores, which is something like 30 lakh crore market. I think by turn of the decade, by 2030, it will be 100 lakh crore market. How much can you manage? And it doesn't depend on whether you are number 2 or number 5 or number 10. How much can you manage? The world will give you as much as you can manage. So I have to build my competencies. Can I manage from 50,000 crores? So can I manage 5 lakh crores? So it's on me. The world is willing to give money. That money is there. If I am good enough, market will be very happy to give it to me. Mm-hmm. So I have to become better. Mm-hmm. I have to have systems. I have to have satisfied clients, good performance. So business-wise, we have a lot of opportunity. So plate is full in terms of number of businesses and size of opportunity. Mm-hmm. How much can we execute and where should we focus? The trend is positive across all the 7 businesses. It's a one way up. Somewhere it is at the angle of 60, somewhere it is 45, somewhere it is 30, but everything is up. We have to do 1 or 2 things big, we have to make moves whereby, it will have a significant impact on the outcomes.
What are those 1 or 2 things?
Yeah, so that keeps happening. But now Moti is setting up towers, he has already set up 2 towers, one in Bangalore. I think it's opening in 6 months. We have to have top quality, sitting space for our people. I mean, this tower was built when it was 50% empty when we moved in here. And within 3 years' time, we need another one. So now we are saying that, okay, let's go to Delhi, Bangalore. So Bangalore is coming up, Ahmedabad is coming up, Delhi is under negotiation. So like that, we'll set up regional centers of large quality spaces. So that is one big move. I hope after 5-6 years, it will have its own impact. Can we have better quality, bigger and better leadership, because opportunity size is just exploding in front of us. Mm-hmm. We have to be also contained in terms of greed. We should not become too much greedy. We should chew as much as we can kind of stomach it. So the real thing is to make a very decisive move in terms of people, in terms of spaces, in terms of which business we want to do, what kind of clients we want to handle. So risk also has to be managed in terms of what kind of business we want to do. So I think it's a happy situation. We have to remain very disciplined. The power of compounding will take over and make the corporation bigger and bigger, but it takes its own time. At 30, 35%, 40%, you can be of different size altogether. I think it's going to be very interesting to see how we'll grow in next 5-6 years.
So clearly, Mr. Oswal, the ambition is there, the foundation is there. But how do you streamline and focus? Which are the verticals you want to focus on? And make the judicious choice of where you want to put your time, energy, attention in terms of growing the business.
The organization structure is very important. That's why your senior leadership, all the CEOs and head of the functions, they are really, I think, well aligned with us. So once you got the kind of thing, right people in the right job, after that it is only about capital allocation. It is only about looking at the strategies and the governance.
So you would not be looking at the inorganic route for growth opportunities. It
We
would all
be
be
open. I think if you get any kind of opportunities, I think in 2005-6 we acquired about 5-6 brokerage firms. But now getting the right kind of strategic fitments at the right value is challenging things. But we would be open to do that. But more inorganic actually growth happens through you acquire the right talent. senior talent itself, that also actually bring huge amount of inorganic growth to the firm.
We have good leadership, so there is enough on our plate in terms of growing.
You have good leadership. What's the legacy that you want to leave behind? What's the plan for the second generation, and how do their aspirations fold in the overall theme of Motilal Oswal's growth trajectory?
We have created kind of, I think, multiple layers of the leadership at level 1, level 2, level 3. So that is very, very robust, and HR is furtherly, I think, investing a lot to make sure that we create a very strong leadership pipeline, so that they will take care of the growth. There are a lot of people, really, I think, who also have good ownership in the company through various ESOPs, which really, I think, have worked very well for them in the past. So that ownership-minded CEOs and the second lines are there. Raamdeo's son and my son, they also really, I think, have joined this business recently. And now, end of the day, is their aspiration, what they want to do and how they want to do. I think time will tell where they fit into. But right now, I think the leadership is very, very strong. If something happens to me or Raamdeo, I think there are people who can take care.
So it's a professional architecture that you want to have at Motilal Oswal, rather than give it the tag of a family business where, you have the
ownership still remains with the family. Both the families own 70%.
Yes.
So you can't take away the ownership part of it. So that will stay like that. But as far as the management is concerned, it's very professional, and even my sons or his son, whenever they take over, like 2 people we are, they would also be 2 persons. So I think they would also like to see that it is very professionalized, even because by the time they actually take over, it will be much bigger company. So that can be managed not by a person, it has to be by professionals. So I think professionalizing is the only way to go forward. And stock certificate can be with anybody, and they have every right to be wherever they want to be. They can be chairman, they can be managing director, CEO, whatever they love, because it's their company. So it's both ways. I mean, professionalization and attracting best of the talent is not to be questioned. That will happen, even by us and by them. And that's how, as I said right in the beginning, we want to build a corporation which lives way beyond us, because we have already shown the way that we'll be giving out as the years passes by. So both the sides will happen. The corporation will grow, other side will keep shedding our holding also.
Mr. Oswal, tell us a bit about what a typical day is like for you, and what do you do over the weekends? We know nothing about Mr. Oswal. He hardly gives interviews, Mr. Agrawal.
I live very simple life. Get up at 4:30, then read, do my exercise, come to office by 9, in the office by 6:30, 6:30 now. I go home early now. I eat my dinner, so I don't eat in the night. And I think most of the extra time goes into reading, or kind of, I think the only leisure activity what I would have easily, I think, do your walk or go to some movies. Spending time with your families and relax.
Mr. Agrawal, what are you currently reading?
Now I'm busy in my wealth creation study. So I just completed one book which actually is very powerful. Strategy beyond hockey stick. So that is kind of, you're asking the strategy question. So some of the answers were coming from, inspired from that. So, you keep getting reshaped as you read the books.
Yes.
You read, you listen to Buffett, you see corporations, you visit the companies, you read the books, and then you see your ground reality here. What are the opportunities? How should we think about the future? How to build the future? Because you have to imagine the future before you build it. Now I'm reading the book of Palak Prasad, what he learned in investing.
Okay.
Darwinian thing. So I just picked it up after finishing first book.
Okay.
Yeah.
How does philanthropy fit into the larger scheme of things now?
The whole life cycle is all about you learn, you earn, and you return, isn't it? So how do you balance between all three needs? Okay, every day we learn, every day we have been earning. Now the question is that, are we really, I think, returning enough? Because God is very kind, and as I said earlier also, we were lucky to be in the right time, in the right place, and we have been beneficiary of a lot of other people have invested into the education. So naturally, the time has come, I think, where we need to be much more generous. We have our foundation, which we have been doing it, I think, in a way, But I think the idea is to kind of, I think, give more aggressively. And that's why this year we have passed the resolution that 10% of our equity, both 5% mines and 5% from Raamdeo's, we are dedicated for charity, and that is got to be spent in next 10 years. So that's the target. Identifying the right cause is also very, very important to make sure that you get the best return on that investment which you do for your social impact.
What are some causes close to you?
Yeah, so first we did where we stayed, hostel. The hostel because of which we met, and where actually because of that I became chartered accountant. Otherwise there was no hope in hell to become chartered accountant. So we contributed to next block, new block, 12th floor block has come, where I think 400 students are admitted for chartered accountancy. Right. So that was the first. In fact, I'm thankful that they accepted our contribution for that. So that was the first one. Then actually education has been the focus, and let's see, I mean, how do we go forward. In fact, one of the things we are doing very interesting is the Krishi Kul. I mean, farmers education, how do you upskill the farmers onto the newer crops, newer techniques. College is coming up, so that's getting completed in next 2-3 months. Farmers education is one area. I come from farming background, so that's a very interesting right now. Let's see how far we go.
Before I end the conversation, Mr. Oswal, what are some life lessons you want to share with young founders who want to make it big?
I think patience is very important. It requires a lot of time to build an organization or build a career. So have patience, but keep moving in the right direction. Have your goal clarity very, very, very clear where exactly you want to go. And you have to, of course, work hard. You need to follow the value system and align with the right kind of people.
Mr. Agrawal, when it comes to investing, you've always said that think long term, India is the place to be, and the power of compounding. These are the main principles that you've always talked about. Tell us some important lessons in the current context of the markets in the coming 2-3 years.
In last 2-3 years, one of the big change which has happened is a mass participation of retail in equity. From COVID, January, February 20, anywhere between 2 to 4 million customers are coming every month, which is unprecedented. It's almost 10x, 12x to what was happening before. We are actually witnessing a revolution, and this is headed to become 300, 400 million. So the power of FIs is already muted. They have some power because they own 18-20% of the market. But as we go forward, I mean, if FIs don't acknowledge this, I think they'll become thing of past. In the sense, they will not be powerful. The local retail will become very powerful. So I think this is a changing time. We are the
interest rates also, the way
so
they've gone
those things
up.
will keep happening. Those global macros, monetary things, they'll keep happening. But you can't stop India. You can't stop this market. We are in bull run for last 40 years, but this round has started post 20. After the COVID, when it fell from 12,000 to 8,000, from there this run has started. It will see its own course, I think 12, 14, 15%, whatever. But we are in proper bull market, and at times it is scary, how big it can be, because the participation is large.
How big can it be? How will our benchmark stock index look a decade from now?
Decade from now is hot. Decade means 10 years, so you can say 4x. So we should be looking at Nifty of 70 to 80,000. Nifty. 10 years henceforth. That is 2033.
And the composition of the companies, you see more new age companies.
Yeah, a lot of digital companies.
Yeah,
I think there'll be, that's a good question. And I think the composition will change quite significantly. In 10 years, we'll see a lot of digital companies into the digital companies or digitally powered businesses will make, because in 10 years, long time for these successful digital companies to become seriously large. Our industry is Zerodha. It must be 15 years old, Modi?
Yeah.
12, 15 years old. And today they are multiple times of us. So that is what is going to happen in many businesses. The digital ones will come from behind. They'll be 10, 12 years old, but they'll be much bigger and much more ferocious, fast growing, much more profitable. So that's what is going to happen. And they will be right on top of the current set of companies.
So at current market prices, the digital companies, the new age tech companies that we have listed on the stock exchanges, are they still frothy?
No, I mean, froth got over last year. Some recovery has already happened. but very few are listed right now. The whole lot of them who are waiting to go IPO, you know. So they will all come in next 2, 3 years, 4 years as the market stabilizes. They become profitable. They earn the right to go to the market, you know. Those things will happen. But when you ask about 10 years, 10 years is a long time. In 5 years, you'll see a lot of digital companies listed, and a lot of these companies will scale up. They're scaling up, but they're not listed right now. They will come up scaled up format in next 2, 3 years time.
Mr. Agrawal, Mr. Oswal, I'm so thankful for your time. Thank you for speaking with us on Forbes India Pathbreakers.
Thank you.
Thank you.
Yeah.